All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital. Man, just, it seems like the last few days, technical difficulties here with the streaming software. It's never an easy day, right? Anyway, it is a few minutes after 11 a.m. Central Standard Time here on Friday, the 21st of October, 2022. I hope y'all are doing well. I hope y'all are being safe. I hope y'all are waiting for the higher confidence trades and, in utilizing proper risk management rather than just YOLOing in just because there's a chance, right? So yesterday evening showed, as far as Bitcoin goes, showed the importance of proper risk management and stop loss placement, as we had the drop down today. But, something may be brewing here. I've got the USD yen chart up here. This seems to be what everybody's interested in at the moment, and for good reason, right? I mentioned that I was looking around this 150, 151 area for a reversal, right? And so this morning, as you can see here, we rallied up to 151.944. And then, of course, we had this drop. Now, if you were paying attention, Bank of Japan intervened again, right around the 150 mark, 151 mark there. This is an awful looking daily candle here, right? But, again, look at how oversold you are. Look at how, topped out and oversold here. Stoke RSI oversold, or overbought. I'm sorry. God dog it, overbought. You had this big pop of daily volume here just to pop it above the R1, and it got the R2. But look at that volume drop right off afterward. There is no expansion of volume, right? It's just a pop. And then volume dropping back down to about where it was. And now here we come with the volume again, right? Weekly, look at that, guys. Again, there's stuff that has to be done, right? You could basically, depending how you want to look at this, you could probably look at this right here. This should be your working support right here at 140.345. So on the weekly, on this long term, dropping below that is going to hint that maybe that top may be in, right? You can draw support here, and breaking down through that might give you an earlier indication, but really you need to at least drop on through here, right? But, this is the bigger picture. Again, you have this bearish divergence here, and then again right here, as we're getting up to the top here. Again, as I was telling you guys, R5 pivot area, right? That's kind of where it doesn't mean it stops right at the R5, usually pop a little bit above, but man, oh man, there we go, right? There's not a lot, that's happening here that we haven't discussed, that we haven't talked about, that we haven't been looking for, right? So here we go. Now, remember, as far as the DXY goes, the yen, the USD yen pair is about 12% of that weighted average, right? It is the second largest weighted average on the DXY behind the Euro USD, which is right around 58%. So what does that mean? That means if you have the Euro USD rallying and the USD yen dropping, there's little left to believe that the DXY isn't going to come down, right? I mean, you're talking about 70% of that weighted value between those two pairs alone, right? So there's where we at. Again, DXY puking all over itself here. We've dipped down below the swing low. That's what I was looking for. You can see that we did actually break just slightly higher above that swing high this morning, right? So if you were watching before, I had this as a 1-2 potentially. The breakout higher here means this is 1-2 here, right? So probably A, B, and C. As you can see, we got 1, 2, 3, 4, 5 here is like an ending diagonal that peaks out just above. And again, giving you that strong rejection right there, carrying it right down, back down below the hourly pivot here for this week. And then again, this support here. So, again, looking at it as a 1-2 here. And so, we should be looking lower. So what we're going to look for is, does this hold as resistance? We're going to look for it to continue down. If we can get that, then, hey, there you go. That's what we're looking for, right? Let's see here. Yeah. So, looks pretty good. Let me see here. Looks like maybe we've got an ending diagonal here. Or a leading diagonal, sorry. ABC 1, 2, ABC 3, 4 coming down. So let's see, there's 3. Will that be the shortest? Man, that's close. Clearly, if this is ABC for 1 here, it's larger than. Now I'm just pulling a quick pull here, so may or may not. But it's pretty close. Let's see if we can get a little bit closer there. Oops. Let me see. 1, 2, 3. 1, 2, 3. Okay, there we go. That's where we're looking. Yeah, I mean, that comes pretty close there. So, we should expect a bit of a rally here, right? At least. But we're going to look and see if we can get a rally up here that keeps this swing high in place and we drop on down below. That's just going to, add more confidence to the idea that maybe, just maybe, that top may be in there. We've still got further to go, though, guys. I mean, it's not a one move does it kind of thing, right? Now, this does look like 5 waves down, and this is, definitely 3 waves up here. So it looks like structurally it's fine. Your 4-hour RSI and Stochh RSI, have a lot further to fall there. We usually get a 5 waves down around that wave B support usually. So, I mean, it's kind of fitting the bill of what we would generally look for. But what we really want to see is further breakdown below this swing low over here at 110.065 or 055 on the DXY. If we can get that, I think that's as close as you get to guaranteeing that the top may be in without actually guaranteeing the top may be in as early as this. So, that's the place we want to look. And then, we want to see a breakdown below this triangle support here at 109.355. That'll help out a lot too. But, so still stuff to do, still stuff, to go here. As you can see, we're finding support at that daily pivot, right? At that daily pivot right there. We're still kind of finding support here. But, again, Stochh RSI, about neutral. RSI sitting in neutral right here on a downtrend from the peak up over here in this area, right? So, you know, again, we want to see this breakdown. I mean, if you're watching this larger time frame, you want to see a breakdown through the daily pivot and this swing low right here. Again, that's the 110.055. Those are your two steps that you really want to see. This was the beginning. Now you want to see if you can get the follow through, getting down through there. You know, if we get that, risk assets should really be kind of priming to move up higher on that. Who's here today? Edward Park, what's up, man? Data's here. Crypto Raid, good morning, sir. How are you? Hank checking in. In case y'all ain't been paying attention, Hank's been busy on Twitter lately. I think he's tried to, he said something about going back to work again. You know, he retired here. He's thinking about going back to work, and I think he wants to become an influencer. I'm kidding with you, Hank. I'm kidding with you. Brian, what's up, man? Matthew, what's going on, sir? Did I miss the Bitcoin update? Watching the local 15-minute charts as an ending diagonal for a C of 2. Okay, we'll check at that in just a minute here. Frank, what's up, man? Mark is here. Good to see you guys. Scott Webb says, poor, cold, and lonely from Tennessee. Well, we were cold over here recently. I think we got down into the 60s. In all seriousness, I think we get it down like the upper 30s earlier this week, you know, as our lows. It was kind of cool over here. Couldn't use the pool. That sucked. Mark says, I'm back, been going through house renovations, which made attending all but impossible with work. Also just got back from first vacation, 15 years. Went to Portugal. How was it, man? I hope it was enjoyable. Oh, man, what's a vacation? I don't know. I'm such a workaholic, man. I don't know when the last time I really had a vacation was. Wazobia Dollars, my friend. Good to see you checking in. Let me see here. Baltazar, good to see you as well. All right, guys. So here's, you know, I mean, you know, we sit here and, you know, we try to look at the shorter term charts and maybe get an idea of what may be going on. But guys, at the end of the day, I keep telling you, even if you're doing them shorter term charts, make sure that you're paying attention. You know, if you're trading them shorter term charts, make sure you're paying attention to the overall what's going on, right? The larger time frames, the daily, the weekly. Make sure you have an idea of what may be happening, right? Because you don't want to get caught up in what looks one way on a short-term chart, which it often does, and it's just part of this larger thing, but it's going the other way, right? So let's say you've got a larger daily rally, right? You know, your hourly chart could be topping out, you know, internally on that rally, right? And you might go, oh my gosh, it's going to reverse and head much, much lower. But really, you're just looking at the 1 hour chart, right? So always make sure you guys are zooming out just to have a good idea of what's going on overall. And then, you know, remember, the shorter your time frame that you're charting, the more likely you are to be incorrect, guys. It just is what it is. Too much price action, right? So, yeah. Let me see here. All right, guys. So, you know, this is kind of what we got here. So we'll see if we can get some follow through. I think right now there's a good chance we may be setting up for you know, a good week for risk on assets next week. That usually happens when you hit the extreme. In this case, the extreme to the downside on your assets. You know, at the end of the other week. So we're on Friday, guys. We had a strong drop down, which with the DXY was a rally up, and then a strong reversal on that, right? Bitcoin. Same idea here, right? We had the strong drop this morning followed by an impulsive rally back up. Printed bullish divergence on the hourly. We are trying to break out of this local descending resistance. It looks like my thing's kind of off here a bit. But, you know, a good impulsive rally here. If we can see some continued impulsive breakout here, I'm going to be interested in longing. You know, we had, with Discord here, we had the further downside targets of 18.812 and 18.512.60. This is the 61.8. This is the 78.6 retracement of this rally up here. We actually hit the 70.5, as you guys may be aware. 70.5 is your institutional pullback level. So we almost hit that on the spot right here, as well as the descending channel support kind of area here. And so now we're getting this pull up here. Now we're peaking out. We're not getting follow through. I don't like that. So we definitely want to see, you know, can we continue higher here? Can we continue to break this out higher? You know, just a quick look here. Looks like 1, 2, 3, 4, 5. And then 1, 2. This may be 3, 4, and get a 5 up here. around that R1 pivot. And, so usually if you're trading pivots, you're breaking above the pivot, your target's that R1 pivot, which is usually the area of the previous rally, right? So, just looking at pivots here, bounced off the S2 on the 15-minute, rallied up really impulsively here into the pivot, pulled back to the previous area of, well, it was resistance, became support when you're above it, right? Found it as support here, rally broke out again. I mean, guys, all you have to do is look left. Look at where we're hitting here. Look at this. Resistance right here, right here, right here, support. I mean, it's clear, it's a pretty clear level to hit there. So, 15 minutes, I mean, we've got room. We can turn around and head back up there. 1 hour, still got a bit of room here. 4 hour, we've definitely got room, right? Look at 4 hour candle, guys. It looks like it opened just a tad above where it closed, so it wouldn't be bullish engulfing, but, damn near over the last 4, 8, 12, 16, maybe 18 hours or so. But again, you need follow through. It's not good enough just to do this. One candle is not enough to make things happen, guys, right? So we need follow through. But I am interested, if we can get continued impulsive breakout here, I am interested in going long. Does that mean that the bottom's definitely in? No, we're talking about trading, right? So, we had this great trade, this great long off here, right? To rally up. That was a good trade. Now, I didn't catch this one. I would have probably gone long if I caught this one. But as you can see, we only went up a bit further here, this support resistance kind of level here, before coming back, right? Here we are trying again. So, good volume on the bottom, good wick, good candle. We just need to see follow through. Now, if the count is correct, that gives you a minimum expected wave 3 target up here of 21,602.50, and it puts that wave 5 up here again in this blue supply structure up here around 22.4, 22.5 kind of area. If we continue further down, I don't know. I'm thinking if we continue further down, we'll probably break down below the swing low here. That's going to invalidate any bullish count off the bottom there. But we're still going to watch that 78.6 just in case, right? There is a lot of demand in this wick here. That's why you got this big push up here, right? There's a ton of demand in this wick. You dip down into it, immediately shot back up. But again, you want to see follow. You want to see the market grab on and follow with it. Just grabbing liquidity here is not enough. That's enough to get it started. You want the crowd to jump in enough, or those in the market to jump in enough that it overcomes supply that's going to be sitting in this area. This is a lot of resistance here, guys. Okay. Let me see here. Let's see here. So there we go. It's kind of where we're looking. Remember, overall, we're kind of looking for this this resistance here, this breakout here. We're looking for the and then we're looking for this 24.79.43. At the end of the day, the trend remains down, guys. Okay. Again, possibly looking at a 1, 2, 3, 4, A, B, C on 5. Looking for a breakdown below the June low. Probably just enough to get down below there and then wick back, wick down below and then come back up. At least that's my current thought. I think that's the most likely thing if we break down below it, just because people are so bearish. And not just in crypto, guys, in everything, right? Everybody's very, 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 very bearish. Everybody's very loud about their bearishness, right? The thing you have to understand, and it takes a while to really understand how to recognize this, but the crowd tends to get the loudest at the extremes, right? So, I've been talking with you guys for, weeks now at least, about the, the coming topping of the bonds potentially, right? We're looking at that long bond. We were talking about the DXY potentially being topped, right? We're talking about Bitcoin maybe being bottom. We're talking about inflation having peaked potentially, right? We're talking about the Fed and, again, everybody thinks the Fed has to actually change course, right? They actually have to lower the fund rate in order for the market to be bullish, right? But that isn't the case. I think the market's already priced in the next 275 basis point rate hikes, right? That's 150 basis points. It seems like, and then we got Evans here recently talking about, the Fed's messaging problem as they transition from these rate hikes to to kind of slowing it down and whatnot. And so you look at what is the market. How is the market kind of expecting things? I'm sorry, guys. Let me turn the air conditioner in here for a minute. I can't get that stupid thing to work. There we go. All right. So, we talk about that, right? And everything. And so here's the thing. It's not wrong to continue to play the trend until there's a definitive change in that trend, right? That is probably the smartest way to trade. The way you make the most money is learning how to find those bottoms, right? Those reversal points before most of the crowd does. That's a lot more difficult, right? But we tend to look at how are people, right? And so, everybody right now talking about Fed funds rates got to keep going up, 7, 8, 10, whatever. It's getting kind of silly, even though the Fed's like, oh yeah, we only want this 4.5 or so kind of area, right? Which, by the way, if we did 75 basis point in November and in December, guess what? They just front loaded that thing. 2023 becomes let's pull back, right? So now we've got daily with the Fed there saying that says we will perform a step down but not a pause to 50 or 25 basis point increments, right? And this is what I've been talking to you guys about. So if the market is expected, if they've already priced in 150 basis points, right? As long as we get that, there should be no strong negative reaction to the announcements of the rate hikes coming up, right? But here's the thing. If they do less, that's extremely bullish for the market, right? Because the market's expecting 150, right? So if they get 125 and the Fed starts slowing down, right? What you're looking for is a move from 75 to 50. That is what that's all you're looking for. If you can get that, I don't see how you remain bearish. Again, if the DXY is topped out, if the dollar is topped out, there's what reason do you have to continue to be bearish? A lot of people, they try to do the fundamental analysis. They go, oh, look, war over there in Ukraine and in China, war with Taiwan and all these things. But, your bearishness is based on these things actually happening, right? But people tend to use that as the reason why, oh my gosh, it absolutely has to continue going down. Remember, the market, the price, does not have to do anything other than whatever it's going to do. We need to stop trying to convince ourselves, which often leads us to then talking really loud and trying to convince others that that it is absolutely going to do this thing, right? Hopefully you've picked up, if you've been watching me for a while, hopefully you've picked up on how I never guarantee a thing, right? I say, okay, look, it looks like it may be doing this, and here's why. But here's that validation level. Here's that level that says, you know what, if we go through this, I'm potentially correct. If we go through this other level, I'm much more likely to be correct, right? But if it goes through this level in the other direction, well, I'm more likely to be incorrect, right? And so then when you trade, you end up flowing with the market rather than being absolute and doggedly stuck, right? Because believe it or not, guys, the biggest thing you're going to face, right? Everybody's like, in crypto, it's, the whales stole my money. In the stock markets, Wall Street stole my money, right? It's such silliness, guys. You gave them your money, right? You are the largest thing that you have to work against in the markets, okay? It's tough. It's tough, especially in a world where everybody blames everybody for everything else but themselves, where the government says, yes, it's okay to blame everybody else. It's not your fault. You're okay. It's everybody else's fault. Problem is, it isn't. It is your fault. And the sooner we, as human beings, the sooner we really kind of accept that and move that, it makes it so much easier to be more successful, as a trader, to make more money consistently. As long as you're holding on to this idea that something is always everybody else's fault, that it's never your fault, that you're just a victim of whatever's going on, the longer you hold on to that, the more difficult it will ever be for you to be happy. Period. End stop, full stop, whatever you want to say, guys. That's it, right? I'm telling you, You've got to make it up in your mind. Go, you know what? Listen, whatever happens, I understand that I have some sort of part in that. It's because of decisions I've made. Now, that doesn't mean, again, this is something I used to, talk about a bit, was, if you're walking down the sidewalk, right, and somebody drives in their car and hits you, well, I mean, it's their fault that they hit you, right? Clearly. I'm not saying it's not. What I'm saying, though, is you made a series of decisions that put you in that place at that time. Period. And the problem is we refuse to acknowledge that. We refuse to acknowledge that we had that it could in any way be our fault that something happened. Now, this is a pretty extreme example, but you can dial it back to anything in your life, guys. You make a series of decisions that get you to wherever you are. Okay? Now, if somebody does something there that harms you or that you feel harms you, whatever, right? You have to understand that you put yourself there. Okay? Now, that doesn't mean you're a terrible person or you're an idiot or anything. What it just means is, listen, if you can go in there and say, okay, listen, yeah, I did that. Then that means, okay, now you can forgive yourself for the poor decisions you made potentially that led you there, right? And you can move on. Everybody in this world is so stuck on what happened rather than what they can make happen. Everybody is concerned about, oh my God, look at what happened to me again. I can't ever seem to get ahead. Every time I try, something happens to me. Translated, I'm a victim. I have no control. And if you really believe that you have no control over the things going on in your life, how can you possibly realistically believe that you can make money as a trader? Being a trader means you have to believe that you can that you can enter a profitable trade and lock it in. You have to. Otherwise, why the heck are you in the market? Right? Now, I'm here to tell you, luckily, it's true. You can. You have control over your life. Getting there is a lot more difficult for people, though. Okay? Because we are so accustomed, we are so trained to believe that everything is everybody else's fault. Our governments continue to push that. Our governments continue to say, yes, that's okay. We're going to support you when you say it's somebody else's fault. And so we never get ahead, guys. We're always stuck reliving those bad things that happen, that we believe happened to us, right? That we believe we don't have any control over. And if you believe that, then you can't possibly continue to move on, right? I bring up all this, guys, and I do this every so often because it is imperative that you understand that how you view life necessarily determines how you are going to view the charts, how you're going to view the markets. Again, you cannot possibly believe that you can be successful as a trader if in the rest of your life you believe you're a victim and you have no control. Trading is about control, right? These idiots. Dating stuff. What's going on? What's up there, Merrick? Good to see you. HJ, always good to see you as well. So anyway, guys, and you know what? Sadly, when I talk about these things, a lot of people who say they want to be traders, they tune it out. Oh, why is he talking about this? I'm bored. Because the reality of it is, you need to understand this. And most don't, right? If they did, we wouldn't have 90-somewhat% of the people out in the first 30, 90 days of trading, right? Losing everything they have, right? So, okay. So what are we looking at? What we're looking for, can we get some continuation up through this consolidation here, right? If we can, we need to break out above, let me see, do I have that? Where did I do that? Oh, there it is. It looks like I didn't have that visible there on that other time frames. All right. So we need to break out above wave circle B here, 19,702.73. If we can get that, that should add confidence to this count and give us at least a target up here of around 21,602.50. That becomes important again because you're coming down through this descending resistance here off, what is that August swing high, right? So that's what we're looking for. As simple as that. If we break down, yeah, we can look here at the 78.6 potentially, but I don't know. You know, if looking at here, I mean, maybe we can make an argument for some kind of ending diagonal that's 1, 2, 3, 4, 5, right? So maybe ABC down for 5 to that 78.6. It's possible, but, you know, again, like I'm sitting here now, I need the chart to say, hey, listen, to give me some proof that maybe that bottom's in, right? And so that means a nice impulsive breakout above here. And then we want to follow through 19.702.73. Once we're through that, I mean, even though we're looking up here at this 21.602.50, we want to see an impulsive breakout above this descending line here. That's the daily pivot area, right? Right in that area right there. That's the range resistance here. The confluence of stuff going on here, like the confluence of stuff going on here, right? That's what we want to see there. Let's see here. All right, so there we go with the with Bitcoin. Let me see here. Let's see. We looked at the euro. No, we looked at the USD yen. We looked at Bitcoin. We looked at the DXY. Let's look at NASDAQ Composite here. Nope, that's not the right one. Let's try again. I just hit the first one without even paying attention, right? That's why I date everything. Hey, thousands of charts, guys. If you're not dating your charts, I don't know. Maybe you got a better system than me, but I think you're asking for trouble. I know I am, right? All right, guys. Hey, listen. So, you know, again, this count is really kind of wacky here. I don't know. You know, it's possible maybe this is ABC 1, 2, ABC 3, 4, and we get an ABC up toward this daily pivot, okay? Right now, based on this 1, 2, that would give us a minimum expected wave 3 up here at 11,409.30. But as I said, with this and this here, I think maybe we might be having some sort of leading diagonal, which again would probably find resistance right around this wave 4 here. That extreme there is 11,230.44, right there above the daily pivot. So I would think maybe that, right? Now, that makes sense also, right? Because you come in, you dip down the S1, you grab your, you rally up off that, you run into the pivot, 5 waves up to the pivot, pull back, and then break out. So definitely quite possible. I'm looking for a breakout above 10,837.30. If we can do that, then I'm looking at this pivot area with follow through up through here. Okay. Right now we're still kind of finding support on this gap for Monday. This opening gap, right? So still kind of finding support on that. So there's nothing definitive about all this. Could definitely fall back down. If we're dropping down below here at 10,308.81, then I think, okay, we're headed lower there. And if we go from where we're at here, potentially, initial target right there around that 95.48 or so kind of area, 95.49. But, it's the same thing. We're kind of looking across the other indexes that we track, right? We look at the NASDAQ Composite. We look at the E-Minis, actually, for the S&P. And then we also look at the Dow. Right now, the Dow, though, now remember, your NASDAQ, your S&P, they're going to be more tech-heavy, right? Your Dow is more broad-based, right? Which means more sectors of the economy kind of showing up in its average, right? And so it looks a bit different. It looks a bit different here, right? So, again, here we are breaking out above the swing high here. So I've got a minimum expected wave 3 based on this being a 1-2 up there at 32,458.5. So we're going to see if we can get that, right? This looks like ABC, 1, 2, 3, 4, 5 maybe. Let's kind of zoom in here a bit. Did we get a dip? I think we had a dip down before a rally up. Yeah. So again, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 maybe. And then we're kind of rallying up here. So, again, you zoom in out here. 4 hours kind of big here. Nice big 4-hour candle. But just up into resistance. Even though we peaked out just barely above it, we're still within this kind of supply structure here, right? Let's see. If we zoom out a bit more to the daily, we're kind of up here as well. So, again, not necessarily looking overly bullish here, right? So even though we have a possible, well, it's not even really a bullish count here. It's just, 5 waves down off this swing high here, right? Again, nothing's changed. It's the same way on all the indexes there, right? We've all got this same kind of level here. We came down off the top, we bounced, and we come down, broke down again, right? It's that first big bounce here on the Dow. It's right there at 34, 281, and 36, right? We have to get above that to really start going, okay, maybe there might be something to the idea that we've got an ABC, just a really short C. Till we do that, potentially just corrective here, right? Now we can continue to look at possible bullish counts in case it gets up there, but meanwhile, we're really just corrective until we break out. Okay? So, I mean, it's just about understanding where you are versus what you think must necessarily happen, right? What's going on, Deadly? Always good to see you, bud. Gold dipped down below, right? Broke just down below the 28th of September swing low here. Just barely. I mean, that was 1622.20, and this is 1621.10. $1.10 below that swing low, right? Nice big bullish engulfing candle here. Now, you don't really have any definitive kind of count going on here. I had it originally as a 1 and then an A and a B. I was looking for a C. But, we kind of kept stretching, and now we're down even lower. And so I've taken the count off. Now, remember, as I continue to tell you, even though we've got this as a 1, 2 coming down, there is the possibility this is 3, and this is some sort of flat for a 4. And we still have 5 heading up, right? Don't let my, I think we're going down to, 1,000 or something, or at least, 12 to 1,300 be something that that says, that's, I'm holding on to it no matter what. That's what it is. No. That's what I think maybe happened, but, what goes on here may change that, right? And as traders, guys, we make money recognizing when we need to switch, when we need to change our thoughts, right? Now, so far, it's worked out really well, right? So from 2017, 18 or whatever, we had the rally up, which is what I was looking for. That was good. Did well. I was looking for it to come down after that. So far, we've done well, right? We're off here, this as of this morning, 22% on the short there, right? It's cool. It's great. Off that swing high there. So the thing is, even if I change, my thoughts, which I would if, depending on what the price action happens in this area, right? That's okay. You don't have to know definitively what's definitely going to happen. You just need to be in the direction of the trend. Have your ideas, right? Have your ideas. That's fine. That's what you need. But be ready to have those ideas challenged. And when you see new information come in that invalidates those thoughts, guys, you have to absolutely let go of them and be willing to change on that. So we'll see what happens here. Right now, when I see something like this, my thought is, okay, we could be getting a double bottom here, right? If we get a double bottom here, we need to have a breakout above the swing high up here, right? And if we get that, that gives us a pattern target up here of right around 1864. Makes sense, right? If you look here, it's this support, resistance, support, resistance, support, resistance. Makes a lot of sense, right? Importantly, it gets you above that big high volume node there. And so if you're on the top side of this high volume node, this starts acting as support. It's resistance to get through it. So if you get through it and get up here and you pull back to it, you're looking for support in that area. So definitely something that could potentially happen. It does look like 5 waves down here. But, the dip below could, again, finish the drop, right? It's just the count off here is no longer anything that's really, with this extra drop here, it's really kind of questionable, right? I mean, how do you get this? You got 1, 2, 3, 4, 5, 6, 7, 8, 9 swings, right? With this morning's breakdown there. So, what do we do? Well, right now we're looking for a rally, right? We're looking for a rally minimally up here toward this probably this area right here. What is this, 1721? Why that? Because that's that resistance kind of support level here. It's also right there at the high volume node, right? So I want to see it through here, right? If we break out through here, then things start getting kind of interesting, and all of a sudden, we start looking up here at that weekly pivot next. And hopefully along the way, we can kind of get a better idea of what this count. But you know, this coming down, you know, it's a lot of, well, what the heck's going on here, right? No real overlap, right, until you get here. Yeah, I don't know. We'll see what this works out as. Right now, I'm interested in long up toward that 17, 20, 21 area, whatever I was talking about. If we can break out above the swing high here, I'm interested in continuing up there. You know, at least to the range EQ here. This range, the equilibrium here at the dashed line right around 1793 or so. Well, 1792 or so, 1793. And potentially even that weekly pivot. Now, if we can break out impulsively above that weekly pivot, you know, I'm going to really start giving some thought to the idea maybe this is just a wave 4 flat correction. We're heading up. But you see what I'm saying here? Until that point, you know, we're still in this downtrend, right? We're still doing this downtrend kind of thing. Though really you could argue if we're breaking out through here, maybe the downtrend's done. But it's, you know, that's the weekly pivot there. So breaking out impulsively above that should have you thinking, okay, well, maybe we're going to get to a new all-time high. But along the way, it doesn't matter if that's what's happening or if we're just going to get rejected and come down lower, right? Or even break out and come down lower. Either case, you're still looking long, right? And I think this is the part that a lot of traders get caught up in is they think they have to, you know, know what's going on. And the odds are almost all the time you won't know what's going on. Does that make sense? Let's see here. What's going on, Bamboo? Let's see here. Was here from the beginning but couldn't chat because of driving. I appreciate that, man. Let's not get any accidents, all right? He says the news just came in, Feds Daily. Yeah, that's what I reposted there on Twitter earlier, right before the stream there. It says we will do a step down, not to pause, but to 50 or 25 basis point increments. Yeah. Now, I haven't had a chance to check and see where he was speaking and saying that or what the context was. I don't know if he means, you know, it seems to me that he would be talking about when they, you know, that it's coming up to that point. Not necessarily that they're going to do it next month or something, but man, you know, that kind of headline looks like, oh, you know, next month be 50 instead of 75, which is kind of funny here because if we look at the Fed tool, I don't have it. Let me see if I can find it here real quick. Fedwatch. I'll pull that up here for you guys. Remember, this is where the traders are trading futures based on what they believe the hike is going to be for the Fed, right? And so as you can see here, November 2nd meeting, 89.7% chance that we get to 375 to 400. We're currently sitting at, oh man, where'd it go? Did I get that? Oh, there we go. Whoop. Stupid pop-ups. Killing me here, right? So you can look at the target rate down here as well. And the probability, what they think now, a day ago, a week ago, a month. So you can kind of see how the trend works here, right? In case you didn't know how to use this thing, right? I mean, that's what we're looking for there, right? And so right now we're at that 3 to 3 1/4, right? So 75 basis point gives us 4 1/4, right? Or I'm sorry. We're at 3 right now, so it gives us that 375 to 4, right? 3.75 to 4. Now, if you've been watching this tool, you will notice that the other day this was around 100%, 99%, I think. So everybody kind of pulling back a little bit, you know, and that's expected with what happened, you know, overnight with the Dow and everything. You got some people that are trying to be really, you know, they're just trying to catch that, trying to be early for that potential, you know, oh my God, surprise, only 50 basis points or something, right? Which, as you can see, 50 here gets you to 350 to 375, right? Because, again, we're at the 3 to the 325 right now. So 75 will get us 3.75 to 4, right? Again, Fed is looking for that mid fours. It's kind of like their target rate area, right? So, again, if you raise 75 basis points in November and December, all of a sudden, Fed's at the rate they want to be prior to next year. And they do it quicker. They get a little Fed, you get the markets talking about Fed pivot, right? Because again, remember, the market's already figured, they're already pricing in 150 basis points, right? And it seems like most of them are thinking it's going to be front-end loaded here. It's going to be November, December, rather than, pulling it into the first quarter of 2023. So, if we don't hit 150 basis points, if we see the Fed start pulling back, again, for the market that's already priced in 150, that becomes extremely bullish, right? But even if they just do the 150, there shouldn't be any real big movements going on with the markets because, again, it's kind of baked in there, right? So we'll see. But yeah, again, you see all this, you kind of watch it. Again, it's the same thing we've been talking about for months, right? We're talking about the impending, bonds topping out, dollar topped out, risk assets may be bottoming, right? So why would this be a surprise? Again, we look at the charts. And I keep telling you guys, stop worrying about this fundamental stuff because this becomes really difficult. Like I said, even for people who are educated to, PhD levels in this stuff, it's very difficult to do. Very difficult to get right with any kind of consistency. That's why you see economists always it ends, right? This economist says this economist says the opposite, right? And you guys think without a PhD in economics or accounting or something that you've got, a better chance at figuring out what's going on, right? The odds are you don't. And it's not to be disrespectful. It's not to be rude. It's just to be a wake-up call to stop worrying about the fundamental stuff because it's a lot easier just to get used to understanding how the charts work. Look for those support and resistances. Look for liquidity, right? If you're Elliott wave, See, the thing about Elliott wave, though, people, they think it's bad. They think, it doesn't work because they see so many bad takes on it. But you have to remember, even, everybody herds. And we all view charts based on our personal biases. So, even when you're doing Elliott wave, your personal bias may be very strong, a certain view of the market, which means you're going to try and fit wave structure in with that. This is me too, right? I mean, it's everybody. I'm not removed from that. I'm just a bit more aware of it, but that doesn't mean I'm going to get it right 100%. I'm not. Nobody is. So you just have to remember these things, right? People tend to discount all these ways of looking at the market. Oh, this doesn't work. Oh, that doesn't work. Again, I refer you to 2017 in crypto, when every week was something new. If people would half-ass it for a day and a half or 2 days, and they go, oh, it doesn't work. Oh, it works. You just didn't work. That was the thing, right? But this is why, why I often talk about, I posted a tweet this morning about coaches and mentors, right? So average people discount the importance of a coach or a mentor in their life, right? Not just talking about trading, with anything in life. I'm telling you what, guys, I know a lot of very, very, very successful people make a ridiculous amount of money, live a life that many of y'all probably dream about every night, right? And I tend to do quite well myself. But the one thing that I've noticed through all these is most of them at some point have had some sort of mentor or coach in their life that have helped them get beyond those limits that they were at, right? Many of them continue to have mentors and coaches today. I have 2, guys. I pay 2 people. Because if you are the smartest person in the room, you better get your ass out of that room ASAP. Find a room where you are not the smartest person in there. You have to, guys. I'm good at a lot of things that I do. Some of those things I'm a lot better than a lot of people. Some of those things I'm not as good. Those things that I'm not as good at, or even those things that I am really good at but I want to get better at, I find a mentor or a coach, guys. And we kind of scoff at that, but think about it. Professional footballers, professional musicians, whatever, right? Classic, kind of musicians, whatnot. I mean, these all have coaches. These all have mentors, right? How do you think they get so good? Sports seems to be the easiest way to show that. Everybody expects that coaches are going to be there, right? Professional sports team, they have coaches, right? You have the head coach, you have the offensive line coach, you have the receivers coach. You get coaches, right? They're there to give you the skills and to work on those things you need to work on to be the absolute best you can possibly be at that position, right? You got coaches all through school. Primary, elementary, primary school, middle school, high school, college, professional, right? Why don't y'all think that you need coaches in the rest of your life? Mentors. Somebody that's doing that thing better than you can possibly do it at the moment. To learn from, to help you figure out where your sticking points are, to help you figure out how to get beyond that, to help you figure out what is holding you back from getting where you need to go. Kind of crazy, right? Let me see here. It is. Yeah, look, Mark says LeBron has a nutrition coach, a shooting coach, a sleeping coach. And look what, because he's at that level. He's at that apex level, right? And he wants to continue to remain as good as possible or to get even better, right? That's the way it is. But, so we tend to accept that if you're going to be a sports guy or something, a sports girl, you're going to need coaches, right? That's like a no-brainer. Everybody's like, oh, yeah, sure, no problem. But when it comes to life, when it comes to business, when it comes to trading, when it comes to all these other things that you want to do, all of a sudden it's like, oh, no, that's just a waste of money. There's no reason to do that. I don't know, guys. Doesn't make a whole lot of sense when you think about it, right? So find somebody that resonates with you and get to making some kind of connection with them. I'm telling you guys, whatever it is you want to do in life, you need to find that. I promise you, it will make you better. Because we don't know often, because we're inside, we can't see those things that are holding us back, right? We're in it. It's hard to look in when you're in, right? You're outside looking in. It's hard to do that, right? Sylvia, what's up, man? All right. So anyway, this is where we got kind of going here. We looked at gold there. What else we got? Oh, let's look at some oil, right? There we go. All right. Oil still doing what we're expecting, still looking for the move up here. There's a couple of possible interpretations overall of this coming down, right? Could be A, B, and C, and done, and head back up, right? Could be 1, 2, 3, making 4, right? As a leading diagonal of A, right? Could be as we have it here, 1, 2, 1, 2, potentially, right? In all of those cases, though, we're expecting price to kind of rally higher. So it doesn't matter which one of those ones it actually is right now. Right now we go long on our contracts. We've got a good target up here at about 100.27, right? I want to see a breakout above wave B here at 89.73, $89.73. As you can see here, we pulled back to the daily pivot, found support on this daily pivot, right? Look at that volume kicked in. You see how it overlaps here coming down, a lot of small candles? See how the volume drops off? That indicates it's likely a pullback, not a trend, right? Sure enough, volume spikes over twice as high here for the previous candle, right? At the daily pivot, we print an inside bar, we rally up. Now, we rally up to the previous area of support here, right, which becomes resistance. That's fine. You expect that. We come back down, and then we drop back down almost to this kind of support area here, right? And now we're rallying back up. Daily chart, a little bit different there, right? We're getting a cross, getting a bullish cross down here. So we'll continue to look higher here. Yeah. Let's see here. I don't know. I've gone through these actually pretty quick here today, guys. I'm running out of the charts here. Let me see what else we got here. We can look at the E-Minis real quick. Let's look at them. And look at that. So this morning, right before the open, We came down to this target area right here around 36.41. We stopped just above it. 36.57. Oh, wait, no. 41.50. We were 0.5 off that, right? Printed this nice long lower leg doji here. And then, boom, market opens. Rally up, right? Into the market open, I guess, I should say. And then we kind of pull back, and then now we're getting that rally, right? So this was the market open where we kind of pulled back and then got the rally off, right? Here we go up higher. Looks like potentially we've got an A and a B, and then 1, 2, 3, 4, 5, right? As an ending diagonal. So breaking out above 37.48 here is going to break us up by what would be wave 4. And that would be the first real clue that that wave 2 may be complete here. Need a breakout above wave B up here at 3774.25 to add confidence to the count. And based on this 1, 2 here, wave 3, parentheses 3 here, its minimum expected target of 3957.75. Remember, though, this is a 1, 2, 1, 2 here. So this would be 3 of circle 3 heading up, right? So if we look at that and we say, okay, well, if this is 1, this is 2, we would expect wave 3 normally right there around 39.33, right? Overextension with an interior 3 up there. So look for that pullback, wave 4, maybe a 38.2. Wave 5 up here around 40, 38.50, just beyond the 2.0 extension. So, you know, again, wave 3, we usually look for 1618 as the minimum expected wave 3 target. And if we overextend, the first thing we look for is that 2.0 target. If you've got log scale on and you're using the non-log trend-based fib extension, usually we look for wave 3 to overextend toward that 200% area, which again is normally your wave 5 area, right? So just right beyond that, right there. So I think a lot of possibility there. Would not be surprised at all to see all these risk-on assets continue to rally up through the end of the day, you know, with these things. Kind of signaling a start to potentially a great week next week for risk assets, right? So, you know, you get this, the beginning of today, you get this final like bottom kind of thing, right? And then price starts rallying well into the end of the day. Potentially, you know, usually when that happens, it carries over into the next week. So if we can see this continuing to rally up here, you know, through the end of the day, I think there's a good chance that we'll have a risk-on week next week, at least through the beginning, the first few days of it. But I think, you know, usually it'll continue on through the end of the week. So we'll see how we get with that. I'm feeling pretty, I like it, you know. Again, no guarantees, right? You guys know that, right? You've been watching this long enough. If you're new, hopefully, you know, you've heard this before, but there are no guarantees in trading. The goal is to just, you know, try to figure out what you think may be happening, right? But not to give it so much heft in your mind that you aren't aware of when it changes, when new information comes in and says, no, fool, that ain't what's going on, right? My brain talks to me like that. It's really disrespectful, but, you know, I pay attention anyway. Hank says no more shocks till November 10th CPI. Yeah, wouldn't that be crazy to see a CPI coming down again? And then we have CPI kind of doing this thing over the last few months, right? Which, again, as I talked about, often comes when you've got this strong rally up and you get to the point where it starts just kind of wobbling. That's usually, you know, a clue that the top's probably in or very nearly so, and we should be seeing it coming down, right? We'll see what happens. We'll see what happens. But, you know, again, for me, you know, just based on, you know, my education and my, you know, 25 plus years here in the market, I think that things seem a lot more likely to be a bottom of some sort. Now, does that mean we have to make all new all-time highs on risk assets? No, it doesn't mean we have to. But I think if you're I think if you're really paying attention, you look and you go, okay, I think there's a possibility that something may be building up here. And as a trader, this is what you want to pay attention to. It doesn't mean you have to change what you're thinking, but it just means you want to be aware. So that way, when that information comes in that's different, that says, hey, wait a minute, fool, we're doing something different than you thought, you're able to actually note it and go, okay, time to change what I was looking at. Otherwise, price continues to go up, but this is what normally happens, right? Price continues to go up, and then traders become confused, right? Because they're holding on so tightly to those things that are in their head about what absolutely must happen according to them, right? Markets be damned, it has to do this. But as I keep telling you guys, the market doesn't have to do anything other than what it's going to do. And we can sit here and say all day, oh, we've got all these risks and all this, and we're right? I mean, there's nothing wrong with it. We do. The risks are clearly there. But our thesis about going lower is based on those. And if things change, we need to change, right? The other part of that is we can't predict. I mean, we don't know what's going to happen in the future, right? Now, sometimes if you're following charts, maybe you got a little bit better idea of what may be coming up. But we don't know for sure. We never know for sure, right? And so if our idea that price has to continue, let's say in this instance, continuing going down, because that's the way we are, right? We're in a downtrend, right? Off the last year, right? Risk assets, right? Bitcoin indexes, all that stuff. So, I mean, the trend is clearly down. The risk is clearly there, right? So it's not wrong to think we have to go further. It's not. It makes perfect sense. But that only continues to make sense as long as those things continue to happen. If bonds have peaked, if the dollar's peaked, if, all these things are happening, if inflation's peaked or nearly so, if CPI's peaked, right? I mean, if all these things are happening, if the Fed's front loading the interest rate hikes, right? And it's already baked into traders, into what they believe is going to happen. Well, this sets the stage for those other things maybe not following through. Right? So I guess what I'm trying to say is, if you're a trader, try not to get so caught up in what you think has to happen, and instead just figure out, okay, well, I think this is going to happen, and this is why. Make sure you've got good real reasons for it, right? But make sure you're paying attention. Okay? Make sure you're paying attention, looking for some kind of invalidation. Whether it's in things that are happening fundamentally, whatever, peace talks, Russia, Ukraine, right? Whatever it is. Or in the charts, right? Right? I know people tend to give a friend of mine, John Wick, right? He goes by John Wick on there. They tend to give him a lot of hell because he's very bearish, right? He's very loud about it right now. But as I just told you, he's not wrong about his thinking, right? He's not wrong about it. But if you pay attention, you also know that he says, listen, if we get a breakout above this, he's looking at the chart, right? He said, at that point, he's going to consider maybe that, some kind of, bottom or at least a bounce might be in, right? So even though he's pretty loud about bearishness and whatnot, he still has that level that he's watching. And that's how you trade, guys. That's how you trade. If you're doing anything else, you're just asking to lose money, right? Jeff Bear, what's up, man? Fed pivot once the CPI crashes. OER is the last big contributor, lagging 12 to 18 months behind. OER will likely moderate around mid-2023. And energy crashes during recession. Market is forward-looking. Let's see here. We might only be weeks, months away from a bottom in risk on. Let me see here. Normally there is like a 13-month lag to a stock market bottom once the Fed pivots. But this time it'd actually be different because we were crashing because of higher rates on my view. Yeah, definitely possibly, right? And so if you're looking at that potential that maybe it's a little bit different this time, then you have to absolutely believe that maybe it happens even sooner, right? Somebody on there, what was it? Livercoin or something like that. I don't know, some account on there. I think he's got a pretty big following. Anyway, I retweeted his tweet this morning. It showed up in my stuff. What did he say there? He said, what did he say? People still discussing whether Max Payne is up or down. Bro, Max Payne is literally where we are right now. Sound familiar? It's the same thing I've been talking about as we've been going sideways, right? The maximum pain is indecision, is not knowing, right? And nobody knows, right here. Nobody knows. There's great technical indications and reasoning for it to break down, and believe it or not, for it to break up. And so bears especially are very vocal here. Now, again, what I've learned, 25 plus years of doing this is that the market tends to be the loudest at the extremes, right? It's at those extremes in price where people believe, if the trend's up, it can't possibly stop going up. It's big jump up, right? Again, I told you guys, 2017, a day or two before we hit that top, I saw that tweet. I don't even know who it was, honestly. And they were like, oh yeah, 81 or 82,000 by February. And I was talking to Scott and I said, man, dude, maybe we hit 20, 21, maybe on like some final yeehaw kind of thing. But man, I believe the top's basically in now. Sure enough, man, within a day or two or that or whatever, that was the top, right? Again, we talked about the same thing over here with the laser eyes, right? Sure, it went up a little bit higher here, but for all intents and purposes, this was the top. This was just that last oomph up higher, right? But the top is a range, right? It's this kind of thing going on, right? And so, we talked about that there, right? Remember I said doesn't have to be a top, or it doesn't have to be the top, but it's likely a top. And we were looking for that move down toward this support area, right? Remember, guys, same thing over here. If you guys were with us in Discord at the time, you would have heard it a lot. We looked over here, right? So when we talked about this top up here, right, my target was, it ended up being around $200 below where we got. So where we get here? 58.73. Yeah, it was around 5,600, right? Because I was looking at this area right here. And I talked about that up here at the top, right? And then, again, I was one of those first people to really put a Wyckoff chart out there, got people looking. I said, well, it's possible this could be the bottom here, right? And I said, but if we break down, then we're going to look down here in this area right here, right? It's 3,000, 3,300 area. Sure enough, we got that. Down here, I said, man, it looks like it's done. It looks like we're, bottom's probably in. Again, but see, here's I do this not to say, oh, look, I figured all this out. But what I'm trying to say is, look at what the market was doing, right? Here, they were screaming below 1,000, below 100, 23 cents, right? And what happened? We went sideways. People became confused, right? They wanted to believe we could go up higher, but fear and whatnot had them thinking we absolutely had to go down lower, right? So what happened? We get up to this 44,000, 4,200 area, and everybody swears it has to go down now. That's going to be it. We're going to get rejected head down. Remember that? You guys were around back then? And I said, no, we're going to break out through that, right? And that 6,000 area becomes the next target. But I said, even that will probably just break on out through there, right? What happens? We hit it, we pull back, boom, there we go. The market remains, as this continues to climb, people are still not getting in. They're still holding to the fact that it's got to go down, right? They're not open to the possibility that bottom could really be in, right? So we get up to the 6,000 area, and again, same thing, but even louder, right? Than what they had at 4,000 here. They said, oh, it's going to get rejected. Look at how long. Remember, all the reasoning came out. All the reasoning came out over and over again, Reasoning was, oh, this was such long support here for a while. They're definitely going to do it. And I was saying, no. I said, those that were buying support here allowed this to drop down, right? So when it comes back up, they're going to allow it just to run up through it like a hot knife through butter, right? And that's exactly what happened. And then, of course, gave you that target up there, right? But again, I tell you this because, again, traders become very honed in on those things they think must absolutely happen, right? Now, I didn't know for sure this was definitely the bottom. We had things we had to see happen, right? Again, we had certain levels we had to continue through to add confidence to the idea that we were there, right? But that's what we did. And that's what we got. And we did it. And we did it, right? This is all just something for you guys to really kind of just chew on for a while and think about whatever it is, whether you're very bullish or very bullish, whether you're at the bottom or the top, whatever it is, to always kind of mind your emotions and see if, okay, am I really being am I really being as middle of the road as possible? Because it's difficult, guys, and you really often don't ever get there, even with a lot of practice, right? But you have to be aware. Am I there, or am I really kind of holding on to these thoughts of what must absolutely happen? Because if you're holding on to the thoughts of what must absolutely happen, and you're not willing to open your mind to what may be happening that's different, this will be you, right? You say it has to go down here, so you don't buy, right? Comes back, you don't buy, right? Comes back, you don't buy, right? You may be selling. Pulls up here, boom, breaks out, or you're selling here, right? Pulls up, boom, breaks out. You're losing money, right? You're not buying. You get here, you're selling again, lose money, right? You're not buying. You finally buy up here. There's nothing different that would happen right here if that same kind of thing is going on. You won't buy. You didn't buy here, right? Didn't buy in these other places. Won't be buying here. You look at these breakouts, right? You'll get here, and you go, oh, it's got to get rejected here. You'll break out here, and you go, oh, it's got to get rejected here. You'll break out here, and you go, oh, it's got to get rejected here. But guys, look at this. You've already gone from, from 18,000, 69,000. 40, 60, what? 250% in that? But this is what most traders do. This is that psychology. This is what runs through them. And even when they buy, even if they were to buy here, there's no conviction or very, very little conviction. So they're selling the first time it starts going against them and they're losing money. Or again, they're buying the tops of these rallies and getting shut down. The problem with the buying the tops of the rallies is that you get shut down pretty quickly, and that reinforces your thought that price has to absolutely go lower. Now, just to be clear, I did not say price cannot drop lower. I did not guarantee you it would not drop lower. I just talked about the psychology of what usually happens with traders in these areas, right? None of what I said says that price has to absolutely be bottomed out. I think there's a good argument to be made, as I've told you guys, that we are. But again, as I tell you guys, even if we're not, my first thought is, with everybody, with the market seemingly so bearish, and not just the crypto market, equities market, they're very bullish bond yields, they're very bullish DXY, stuff like that, right? I showed you the article. Even the money managers, the fund managers, are at these, they're just now getting to these very heavy bullish dollar positions, right? At the top of almost a 2-year rally. So I think there's a lot of things going in that could say, the bottom may be in. But again, we still need to see the things I talked about. I continue to talk about the steps needed to add confidence to the idea that maybe that bottom is in. You as a trader, you then have to figure out, okay, at what point am I looking to enter, and where am I looking for that invalidation when I do? If you're looking to enter now for a rally up to 100,000 plus, you better not be on anything shorter than a daily chart. There is absolutely going to do you nothing to get in on the hourly chart, because your time frame is this, guys, minimum, right? You're looking to get way up here higher, right? There is absolutely no reason, if you're looking to get up here, that you should be anything under a daily. That should be the minimum that you go. You probably should look at the weekly more than anything else. which means you're going to have to wait longer to enter. But you want to catch, you want to be at those very low prices. You want to try and catch the lowest price, right? So you enter on the 15-minute chart looking at, a year or 2 year rally, right? Don't do that, guys. Don't do that. Please. You're asking to lose your money in that case. You have to be cognizant of your time frame. Look at the charts that do with that, okay? What's going on, Andrew? Good to see you always. Let's see here. What else we got here? Hank says he's accumulating, not even trading. After 2019, 21, and 21, that is not that necessary. Excuse me, hiccups here. Not that necessary. But I'm cooking and traveling more, which is nice. Go travel. Best gift you can give yourself. I absolutely 100% agree with that, guys. Travel. As I used to say quite frequently when I first started doing this, sitting on your, laying in your deathbed, right? You're going to pass soon, right? You're not going through your head about all that extra money you could have made, or those cars you could have bought, or those houses you could have enjoyed, right? You're going over your memories, those places you went, those experiences you had, the times you spent with family and loved ones, friends, right? We spend a lot of time in life with recency, right? We're always thinking about right now. There's always going to be time tomorrow, right? I'm always going to do that tomorrow. Fact is, tomorrow doesn't come a lot of times for a lot of people. The last thing you want to be doing is sitting on that deathbed going, man, I should have done this. Whatever it was. With family, loved ones. Traveling even by yourself, right? Experiences. Rather than, working that hard and doing those things. This is something I have to work on. I tend to be quite a workaholic. But I am aware of it, so I'm working on it. Right? Just like in trading. Can't be so hung up in what you think has to happen that you don't pay attention to those other things that should be happening or that may be happening, right? All right, guys. Listen, I'm going to get out of here. I hope you guys have an absolutely amazing weekend. Seriously, not a lot of people follow me on here. The format is a bit long for a lot of people. And, I'm looking at ways to provide shorter format. Wouldn't be live streams, obviously, but content for you guys. But, I take the time that you guys spend with me here seriously, realistically. It means a lot. And so I try to make sure that the things I say are things that need to be said, so that I'm not wasting your time. All right? I appreciate you guys showing up, honestly. I love doing this. I love hanging out with you guys. I love your thoughts. Even when you don't agree with me, it's perfectly fine, guys. I like hearing other sides to it. You might come up with something that I'm not thinking about, or maybe that I didn't take so seriously because I kind of just half thought it, right? I'm still human. And then when you say it the way you say it, I go, oh, wait a minute. Maybe you're onto something. Anyway, Discord. You guys that are in Discord, I will see y'all there in a bit. The rest of y'all, I hope, again, everybody just has an amazing weekend. One of the best things I can tell you as far as trading goes, guys, when it comes to especially the sideways like this, is look for your higher confidence trades. Don't enter just because. Look for your higher confidence trades. Those things may be divergences, maybe, strong volume rallies off support, or at, rejections at resistance, right? Don't try to sell your supports. Don't try to buy your rejections. Do it the other way. It doesn't guarantee you're always going to get it right, but it'll at least make sure that you're making a lot less wrong decisions. Okay? As always, remember, the only thing you control is how much you lose, right? That's it, guys. I hope you know that by now. So risk management is the most important thing you will ever do as a trader. It should be the cornerstone of your trading. All right? I appreciate you guys. Deadly, thank you so much. Frank, again, as well, guys. Jeff, man, I appreciate, I can't get into deep conversations with many other streams. Again, I take you guys seriously when you're here. So I hope to always be providing you, again, not that you have to necessarily agree with me, but I hope it at least gives you things to think about. Because y'all often with your thoughts give me things to think about as well. All right? All right, Matthew, Hank, DJ, Data there, Andrew, Jeff, Mark, everybody. You guys have an amazing day, amazing weekend. I will see y'all on Tuesday, 11 a.m. Central Standard Time, all right? Take care.